good afternoon, or good morning, depending on your location. Welcome to USDA's programs in the time of coronavirus, Producer Resources. My name is Latrice Hill, and I serve as the National Director of Outreach for USDA's Farm Service Agency. Presenting along with me on today's webinar will be National Program Managers from the Farm Service Agency, the Natural Resources Conservation Service, and the Risk Management Agency. For today's webinar, I want to make sure that you are aware that this is being recorded. It will be available to you later on, but for right now, all of our participants are in listen-only mode. You're only able to submit questions through our chat box, and we do encourage that you do that. We'll answer as many as we can, but depending upon time, we may not have the ability to answer every question today during the broadcast, but we will follow up with you later with a response. As a reminder, there is a frequently asked questions page on our farmers.gov website that may have some of those answers that you're looking for. So be sure to visit the website for reviewing questions. So today's discussion will cover the program flexibilities of three agencies, as I mentioned before: the Farm Service Agency, the Natural Resources Conservation Service, and the Risk Management Agency. We'll also go over the basics of the Coronavirus Food Assistance Program. And lastly, we'll talk to you a little bit about understanding the Notice of Funding Availability for the Coronavirus Food Assistance Program. But as you know, COVID-19 pandemic has impacted agricultural operations across the world in many ways. And before the CARES Act even passed, FSA was already busy establishing program flexibilities and new ways that we could continue to serve our customers. Some of these changes, or most of these changes, have influenced our site visits, the digital acceptance of forms and signatures, customer interactions, and many other program and loan flexibilities that we'll all review today. It's important to know that our offices, service centers are open for business. Some are actually available for in-person appointments. Be sure to contact the office to schedule an appointment before you visit. For any of you who are not used to or not accustomed to where your local service center is, we'll cover it a little bit later, but that information is available on the website, an office locator to help you find the service center nearest you. But as you visit our offices, please know that there are some things that will be required before you come in for an in-person appointment. You may be asked to wear a face covering, but please keep in mind that despite what's going on, our field work continues, and we are eager to serve you, either in the office, on the phone, or using some of our online tools. So how are we serving customers if some of our offices are closed? How are we delivering programs? How are we executing documents to producers and producers giving them back to us? Well, we're happy to announce the beginning of a service through Box and OneSpan. This is something that is available for new and existing customers that will allow producers to access, sign, and share documents with the service center in just a matter of a few clicks. These tools are offered at no additional cost, and it really improves the efficiency for our farmers. What you can do now is just online. You can completely complete most of your business transactions without ever leaving your home or your farm. Of course, Box and OneSpan will never replace our existing systems that require the Level 2 e-authentication for digital signature, but instead what it does is provide an additional resource to allow you to conduct business with USDA. If you're an existing customer, staff will contact you, and if, let's say, there's a document that needs to be signed, and if you're interested in using Box or Box with OneSpan, you can reach out directly to apply for the programs. One such program would be the Coronavirus Food Assistance Program using these tools. So let's talk a little bit real quick about what it means. What is Box and what is OneSpan? Box is it's a tool where producers create a username and a password to access a secure Box account. And this is a place where documents can be downloaded, printed, they can be manually signed, scanned, uploaded, and shared electronically with Service Center staff. OneSpan is a secure e-signature solution for FSA and NRCS customers. Now, like Box, nothing will, replace software downloads or level 2 e-authentication. That is required for OneSpan. Level 2 e-authentication is a way that customers digitally or electronically provide information to us. There's a process, but no software, and let me clarify that, no software downloads nor level 2 e-authentication is required for OneSpan. Neither is it required for Box. So let me make that clear. I think I messed that up. I apologize. Neither Box nor OneSpan will require the level 2 e-authentication. Instead, producers who are interested in using this can confirm their identity through a two-factor authentication. So not the traditional e-authentication. It's going to be different. It's just going to be the regular, just a regular authentication process. So these are tools that we are happy to provide to our customers, and it allows you, again, to never even leave your home, which I think is the unique thing about it. It's not mandatory. It's not something that you're required to do. If you prefer to sign documents, by all means, of course, using social distancing preventive measures, we do ask that you do that if that's what you prefer to do, submit in person. But if you want to mail it, you can also do that as well, use the regular postal mail. But we wanted you to know that these are two efficient processes that have been established for producers. What we're going to do now is talk a little bit about the Farm Service Agency program flexibilities. And for these flexibilities, there are different programs that we'll cover. We will talk about farm loans. Farm loan programs has a couple of flexibilities through their programs that they've identified to make sure that we are serving customers during times like this. We do understand that, times are critical, and our programs are critical for you to survive. And so we want to make sure that our farmers and ranchers have access to programs that will meet their needs and help them to cash flow during this time. Also, we will talk a little bit about commodity loans. We'll talk about marketing assistance loans and farm storage facility loans. These will be the first set of programs that we talk about from the Farm Service Agency. So right now I'd like to introduce one of our farm loan program colleagues, Ms. Laura Morris, who's going to talk to you a little bit about the loan making process. Laura, thanks so much for joining us.
Hi, Latrice. Thank you. Again, my name is Laura, and I am a Senior Farm Loan Officer here in the National Office. And as you all may know, FSA offers farm loans to producers for operating purposes and for farm ownership. Now let's talk a little bit about the flexibilities the Farm Loan Program is offering for processing applications for new and existing borrowers. If applicant is having difficulties completing their applications for reasons that are outside of their control due to the pandemic, an authorized agency official may grant the applicant an extension. Loan officials and applicants should maintain close communication during these times, and the decision as to whether or not the extension is granted will be made on a case-by-case basis. As a prior loan officer, I cannot emphasize enough the importance of keeping in close communication with your loan officer. Moving on to talking about lien searches, that's another flexibility that we have. It is typically lien search and county record searches are required prior to an applicant being deemed eligible. If such searches cannot be completed due to the local and state government office closures, applicants may consider eligible and processing of a loan continue without a county record search if all other eligibility and loan-making criteria have been satisfied. Also, keep in mind that the lien search must be completed before the loan can be closed. Let's move on and talk a little bit about how we have some flexibilities with our loan closing. Prior to a loan being closed, FSA must continue to complete local, county, and state record searches and recordings to ensure adequate security is available for all loans. If delays in recording record searches and filings do occur due to closures of offices, loan officials are authorized to approve a loan subject to obtaining verification that the necessary security position will be obtained to ensure the loans are adequately secured. Loan closings will be delayed, however, until the searches can be completed. If filing and recordings on additional security to be pledged cannot be obtained in a timely manner due to state and local government office closures, a loan official is authorized to close the loan provided that the required lien position on primary security is perfected. An example of this would be if we have an annual operating loan that is adequately secured by a crop lien with a UCC and electronic filing system filed with the Secretary of State's office. The applicant also owns property that would typically be pledged as additional security. However, because the local county clerk's office is closed and is not able to timely work with FSA to complete a lien search or record a mortgage, FSA may continue with the loan closing with just a perfected lien on the crop security. Loan closings are not currently completed strictly by mail. If an applicant is unable to meet while social distancing, a video conferencing may also be used to facilitate some loan closings, particularly where notary services are not required. The successful use of video conferencing enables customers to sign pertinent documents in the visual presence of a loan officer and ask questions if they deem necessary. The original signed documents would then need to be returned to FSA prior to the release of the funds for the loan. That is all I have for today. If you have any questions, feel free to ask them throughout the question and answer. Thank you.
Thanks so much, Laura. We're now going to go over and talk a little bit about loan servicing. And so I want to say the difference. Loan making, of course, is when you're applying for a loan through the Farm Service Agency. Loan servicing, of course, is for existing customers. When you already have a loan, what are some of the options that are available? And we have with us Mr. Craig Iveson to go over that. Thanks for joining, Craig.
Hi, Latrice. Hi again. This is Craig Iveson. I'm a senior loan officer in the national office. Just to touch upon some of our flexibilities with our direct loan servicing, we have several servicing programs that we typically offer, and we've created some additional flexibility due to the pandemic. One of the things I just want to remind our borrowers who may be listening out there is that we have always have and continue to have the ability to release normal income security proceeds. That would be crop, milk, market livestock, or livestock product sales. Again, they can be released for essential family living and farm operating expenses. And for those folks that have that type of income, they're probably familiar with our FSA 2040, which is the Agreement for Use of Proceeds and Security. We would just need to revise our agreement that we did at the beginning of the year with you. In addition to that, we can also temporarily lower or reduce assignments that we might have out there on particular products. One of the key things that I'd like to draw your attention to is there's a document out there, and you can see the link to the website, which is the FSA Farm Loan Compass. It's a wonderful little guide, tells you all about our servicing activities and what we can do and some of the things to help guide you. And it is written for not over anybody's head. It's really a layman's terms in that, and it's a great little guide that's been out there for a couple of years, but you can download it from the link that's right there. One of the other things we've done is we've also, some of our time frames for loan servicing actions have been temporarily extended in order for everyone to adopt to social distancing and limited interactions due to the pandemic. Borrowers are actually being notified of the additional time periods with a guide letter that's included with our normal servicing notifications. But just as a reminder, if anybody is having difficulties meeting any of our time frames, please get a hold of your loan officials and discuss the situation with them and ask for additional time prior to the deadlines coming.
Hey, Craig, can I ask a quick question before
Yes.
we go to the next slide? When you say servicing action may be temporarily extended, what would be an example of a servicing action that would have a time frame to be extended?
Yes. The servicing action in this particular case that I'm thinking of is our primary loan servicing, which is our ability to restructure loans, reduce interest rates, and where we also offer other servicing options, current market value buyout, write down of debt, those types of things. And with those documents, those actions, there's a specific time frame for borrowers to respond, and those can be extended due to the pandemic situation. And in those cases, we're providing a guide letter extending those time frames if they're needed. We would encourage everybody to apply in the normal time frames, but if we are allowing extensions.
Okay.
So the primary
one
loan
last
servicing and yep. Go ahead.
I'm sorry. One last quick question. So if I am a borrower who is currently I'm facing acceleration, which means that my loan has defaulted and it's about to become fully due, and foreclosure proceedings are the next step. Are foreclosure actions or acceleration still taking place right now during COVID?
We have no. The short answer is no.
Okay.
The government has requested that all of those foreclosure actions be paused, but that's just a temporary pause, and those may be reinstated here in the not too distant future. So it is temporary. We did pause along with most every other agency's requests, and that was driven in part a lot by the Department of Justice.
Okay,
but
great.
we also did,
Thanks for
as an
clarifying.
agency, decide to do that. Yep. One of the programs that we've released since the COVID is, I'll sort of call it a sister program to our existing disaster set-aside program. Our current program, Disaster Set-Aside, is just based on the sound, is a program where we can set aside an annual loan installment if a farm has suffered from a disaster, tornadoes, floods, hurricanes, those type of things, and we can clearly document that there's been an adverse impact on the cash flow of the farm business. We could do a disaster set-aside. So with COVID, we were able to develop fairly quickly here this program. And what this does is borrowers were notified with a letter that was dated May 19th of available servicing tools. And this is designed to provide a quick and easy relief for our borrowers and our staff. Essentially, we just set aside the installment going to be due either here in 2020 or 2021, actually September 1st. And one of the key items in this program is that borrowers don't need to submit or develop a cash flow or a feasible plan, as we call it. And FSA does not take a lien on any assets on all assets for borrowers whose payments are past due to the pandemic. We're also allowed to do a second DSA, for short, disaster set-aside, for borrowers who already have a DSA but need an additional one due to the COVID-19 outbreak. The borrower does not have to have sufficient income available to pay all family living and farm operating expenses and creditors. So that's the key, is if you've had a impact of COVID and you can't provide for all your farm operating expenses and other payments, then you can apply for and receive the COVID disaster set-aside. And it's also available to borrowers with annual operating loans, even if there's less than 2 years remaining on the loan. Well, the agreement that gets signed by the borrower is that the maturity date for the annual operating loan will be extended for an additional 12 months for the set-aside to take place. It's also available to youth loans, which I'll talk about a little bit. In the past, youth loans were not eligible for this. And it's also available to those borrowers that have both program and non-program loans. Unfortunately, it's not available for borrowers with non-program loans. And non-program loans are those special loans that the agency has made that are comparable to commercial rates and terms. And also borrowers with 2 years remaining on their loans are not eligible for this. Those borrowers should seek to graduate to commercial credit or apply for primary loan servicing. So to request a COVID DSA, the documentation is very flexible. Some of the examples may be just to show the inability to timely plant or harvest due to the pandemic. If illness of the borrower or members of the household, inability to timely market due to closure of public auctions and markets. You know, we heard a lot about the processing plants being shut down. That's a perfect example. Increased costs to holding product in inventory. Reduction in demand or prices directly attributed to the COVID-19 and social distancing requirements. You know, particular ones that come to mind are a lot of the fruit and vegetable farms that provided product to restaurants. They were unable to market a lot of their product. And then the other thing too is loss of non-farm income due to businesses closing. So that's a nice eligibility feature. And what we'd like you to do is to review the letter that the agency sent that spells out all of our eligibility requirements. And just as a reminder for the borrowers that may be on, the letter generated a lot of calls to our local offices from borrowers who wanted to reduce their interest rates. We would like just to remind borrowers who want to reduce their interest rate that they must apply for our primary loan servicing, and the lower interest rate can only be offered after a complete financial analysis is completed. And so that concludes the direct loan portion of this presentation. But on our guaranteed loan servicing, we also have some flexibilities that we've been able to offer. Producers who have FSA guaranteed loans, you should work directly with your lender. Then the lenders will be in contact with the Farm Service Agency. For those guaranteed lenders that are out listening, you should have received 2 letters from FSA. The first one dated April 6th, and the second one, which I'm not exactly sure of the date, was detailing additional deferral options, and that one was signed by our administrator. The first one was signed by our deputy administrator. But for advances on lines of credit and emergency advances, while FSA continues to operate under our emergency guidance, the agency, if approval is not required, but the lenders, which are standard eligible and are certified lenders, will need to self-certify that all the requirements are in place. Also, our standard eligible and certified lenders may make non-guaranteed loans to our existing guaranteed borrowers without prior approval after certifying to FSA in writing that feasible cash flow projections have been developed. A feasible cash flow is not a requirement of the SBA's Paycheck Protection Program. Therefore, all lenders may make the PPP loans without our consent. And in addition, FSA is now offering to lenders the option of a full year payment deferral. So it's sort of similar to the direct side of our DSA program. But as previously mentioned, lenders should have received the deferral options letter, which provides eligibility requirements and authorizes the lenders to defer payments without a feasible plan projection. They can defer payments either up to 180 days or defer the full annual payment up to 12 months and amortize it over the remaining term of the loan. or have it due at loan maturity. For lenders who have loans in liquidation, FSA is allowing lenders to accrue up to an additional 90 days of interest accrual due to the delays caused by the court systems.
All right. That's some really good information on the loan program. Thanks so much, Craig. We now want to bring on Shalay Watson-Porter, who serves as the program manager with Farm Service Agency's Farm Program Division of Marketing Assistance Loans. Shalay, tell us a little bit about NALs.
Well, hello, everyone, and thank you, Latrice, and also to the outreach staff for the opportunity to talk about the COVID flexibilities and how they relate to the Marketing Assistance Loans Program. And Latrice already gave you my title. I do serve as a program manager for Marketing Assistance Loans and Loan Deficiency Payments within Farm Service Agency. Just to give you a brief background of what a Marketing Assistance Loan is, for those of you who aren't aware, FSA offers interim financing to producers for certain commodities, which allow the borrower to meet cash flow needs without having to sell your commodity at harvest time when prices are typically low. Producers are able to store commodities on a farm or in an approved warehouse, and this allows you to market your commodity when prices are typically higher. These marketing assistance loans, also known as MALs, are typically 9-month loans, which means they must be repaid at 9 months after the loan is dispersed. However, with the passing of the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act, producers are now eligible to extend that loan maturity by 3 months. So our typical 9-month MALs are now 12-month loans. This extension applies to non-recourse farm or warehouse stored loans. And what I mean by non-recourse is that the collateral, the commodity that's under loan, may be given to the Commodity Credit Corporation in a process called a forfeiture or settlement to repay the loans. And we can do this instead of you can do this instead of repaying with cash. This new maturity extension is available to loans for crop years 2018, 2019, and 2020, and applies to loans that are open and in good standing with a maturity date of March 31st, 2020 or later. A new loan can receive this extension as well and must be requested by September 30th, 2020. So we're going to apply this 3-month extension to all loans if you come into our office up and request a loan by September 30th, 2020. Any loan that is requested after September 30th will revert back to the 9-month term. If you do not wish to extend your loan terms, just reach out to your local county office. And if you have any other additional questions about the MAL program or the extension, feel free to type them in the chat box. But I would also encourage you to reach out to your local county service center. So thank you very much, and please stay safe, everyone.
Oh, thanks so much, Shalay. That's good information to know about marketing assistance loans being extended from 9 months to 12 months. Now we're going to talk a little bit about our farm storage facility loans. And for that, we have the Farm Program Manager for FSFLs, Ms. Tony Williams. Hi, Tony. Thanks for joining.
Oh, thank you, Latrice. Hi, everyone. Yes, my name is Tony Williams. I'm the Program Manager for the Farm Storage Facility Loan Program. And this wonderful program provides low-interest financing for storage structures, drying and handling equipment, and storage and handling trucks. The program has been available since 2001. Currently, our interest rates for FSFL are a little greater than 1%, with terms up to 12 years. So we offer wonderful rates and terms. So we'll go right over and discuss some of the flexibilities that we're offering for this program. We allow producers that do not require additional security. They can close their loans electronically or by fax. FSFL's producers, instead of visiting our county offices, producers, dealers, or suppliers are able to send photos of the FSFL project, which includes drying and handling equipment or storage and handling trucks, to the county office. Lastly, FSA has temporarily stopped the following FSFL activities scheduled to take place through June 30, 2020. We will not accelerate your loan. We will not foreclose or liquidate a loan up until June 30, 2020. Latrice, that's all that I have to offer for our flexibilities for this program, the Farm Storage Facility Loan Program.
Wonderful. Thank you so much, Tony, for sharing that information. And before we leave the Farm Service Agency and go over to our sister agencies, I want to just briefly touch upon the county committees. And this is an opportunity for a lot of you who may not have even heard of the county committees. This is something that I think is going to be a unique opportunity for you to participate and have a voice in program implementations that affect the county that you live in. FSA has a county committee system, and if you are participating in the CFAP, Coronavirus Food Assistance Program, you're actually eligible to be a nominee and run for a position on the committee and be a voting member. And in addition to being able to be eligible to serve, your participation in the program allows you or qualifies you to be included as an eligible voter, part of the eligible voter list to receive a ballot in the mail so that you can vote in your local election. So, Latrice, what are you talking about? Local election, what is this? FSA, people may not realize it, but FSA has offices across the country. We have over 2,100 county offices that actually have representation of farmers and ranchers locally that get to serve in what we call a county committee. This committee actually makes decisions. They have a voice in program implementations, and it's a leadership opportunity, really. It's a great opportunity to serve and represent your community. You're working with other peers, other farmers in different parts of your county, and you'll actually be able to have an impact on how our programs and services are carried out in that office. This is something that FSA has had for years. It's something in which our farmers and ranchers vote for. So you can nominate yourself. You can be nominated by others or by an organization. There's a special criteria of eligibility. All of that is online, but it's important to know that our nomination period just opened up this week on June 15th, and it's ongoing until August the 1st. So even if you're not interested in running for office or being a member, you should at least read up a little bit about the county committees, because you will receive a ballot and have an opportunity to participate in the elections. Voting will take place later this fall. The dates are here, and there's a website that will be available to you in these slides when this is posted online. And we encourage you to visit that website and learn a little bit more about having a voice in your community. Next, we're going to talk with some colleagues from NRCS, which is the Natural Resource Conservation Service, and the Risk Management Agency, about some of the resources and flexibilities they have available for producers during COVID. We're going to start with NRCS, and we have with us Mr. Gene Kim. Gene, can you briefly share a few of the flexibilities that NRCS has to offer?
Sure, and thank you for the opportunity. As mentioned, my name is Gene Kim. I'm a natural resource specialist with the policy branch of NRCS Financial Assistance Programs Division. Just as a reminder, my agency, the Natural Resources Conservation Service, is the USDA agency that provides technical expertise, conservation planning, and financial assistance for those farmers, ranchers, and forest owners that want to make conservation improvements to their land. Our agency has been exploring program flexibilities on how our state staff at local service centers can continue to effectively and efficiently provide both the technical and financial assistance during this COVID-19 emergency. As mentioned previously, we have employed new flexibilities to accept producer signatures in a variety of ways, including sending signatures via fax, email, scanned photos, as well as the important new technologies like Box and OneSpan. Those are the two-factor digital software signature solutions that was mentioned before that both FSA and NRCS is adopting. We've also explored flexibilities on the tasks that NRCS can adjust to adapt to this COVID-19 national emergency. Our staff have the ability to work with producers one-on-one to address delays in practice implementation. We realize many of these are beyond the producer's control. We are able to adjust contracts in response to those delays through contract modifications when possible. For site visits, when they have to happen, we have practices in place to replace site visits when possible with phone calls or conference calls or different remote communication. However, when site visits have to happen, we have practices to stack or conduct multiple activities during a single site visit rather than making multiple site visits, and to minimize the amount of staff and individuals present. Some of the activities can be done when the producer is there, and some of them can be done when staff are there on site. Next slide, please. So I want to point out one conservation practice that might be of use, especially to livestock producers during COVID-19. This is the emergency animal mortality management practice. This is part offered through the Environmental Quality Incentives Program. While we realize that there are limited markets and limited processing capacity that cause livestock producers to be forced to depopulate their herds, our assistance can help both with the technical support and the financial support for the proper disposal of the mortalities from natural disasters. And COVID-19 qualifies for this situation. The management practices could occur on-site or off-site if a suitable location is not available on farm. So the emergency animal mortality should achieve the following purposes. It should, these proper disposals should reduce impacts to surface water and groundwater resources. It should reduce the impacts of odors. It should decrease the spread of pathogens. There's a variety of methods on-site, including composting, forced air incineration, burial. Off-site disposal method could be transport to a landfill, to a renderer or incinerator. I want to note, and you can go back one slide, this conservation practice is not intended for disease-related mortality events. Our sister agency, APHIS, the Animal and Plant Health Inspection Service, is the USDA lead for disease-related issues. And finally, for the EQIP program, beginning farmers and ranchers and other historically underserved producers can receive a higher payment rate. So those are limited resource, socially disadvantaged, veteran farmers and ranchers, beginning farmers and ranchers. Okay, next slide, please. So if you're interested in this emergency animal mortality management, producers should begin and end their interactions at the local USDA Service Center. To receive assistance, they need to apply and be approved for an early start waiver prior to any disposal of animal carcasses if they wish to receive financial assistance. So this approved early start waiver gives them the okay to dispose of the animals prior to being approved for a contract. It's not a guarantee of funding because EQIP has limited funding and may not be able to fund all requests. Of course, producers are required to have farm records established with their local FSA office and eligibility determinations filed. A livestock or poultry mortality certificate may be required. Is required by a veterinarian or an animal health specialist. And bear in mind that financial assistance is limited and not all the applications will be funded. As well, payment limitations will apply. Again, if you are interested, your local USDA Service Center is where you should go to find out more about this program.
Thank you
and that's
so
all I
much,
have. Thank
Gene.
you.
Well, thank you. That's really good information. And I will note that more information and fact sheets are available online, and we will share that link later. But as you can see, the farmers.gov website has a lot of this information that we're going over today. And before we talk about the Coronavirus Food Assistance Program, we're going to hear from Risk Management Agency. It's going to tell us a little bit about some flexibilities they have. And today we have with us Pam Bollinger. Pam, share with us, please.
Thank you very much, and good afternoon. Thank you for the opportunity. My name is Pam Bollinger. I'm a Senior Policy Advisor for the Risk Management Agency. Our agency delivers the Federal Crop Insurance Program through a private-public partnership, meaning that insurance providers and their agents and loss adjusters deliver the crop insurance program for us nationwide. So if you happen to be a grower on this call or someone that doesn't have crop insurance is delivered through the private insurance agents, and there is a directory on the RMA webpage to assist you in locating an agent. So with that, on the next slide, the Risk Management Agency has issued approximately 10 managers' bulletins beginning in March of this year to provide program flexibilities for COVID-19. Managers' bulletins are issued through our administrator's office to provide procedures. These procedures included insurance deadlines and additional relief. This allowed policyholders to provide information over the phone or using other electronic methods such as email to select policy elections such as coverage levels. These are for the purpose of reporting acreage and the production for the crop insurance policy. Producers were allowed to either sign digitally at the time of submission or to follow up with a signed form no later than July 15th of 2020. Similar authority was authorized by the Risk Management Agency for associated options, elections, and endorsements to the crop insurance policies. The next item was that we modified crop insurance underwriting inspection requirements for recognizing limited abilities to get out into the field to conduct those inspections. An example of that is the Nursery Value Select. It is a new program that was offered by the Risk Management Agency for the 2021 crop year. It's offered in select counties alongside the existing nursery program. For this year, RMA authorized insurance providers to waive the crop year inspection requirements for both nursery and Nursery Value Select, provided that an inspection report did exist in a prior year for 2017, 18, and 19, or 2020. And then production reporting deadlines. This allowed production reports with a reporting date of March 15th or later, additional relief by allowing production reports to be submitted by the producers the earlier of their acreage reporting date or 30 days after their applicable production reporting date. The next item was interest deferral, which this provided additional time for our policyholders to make payment of their premium and their associated administrative fees. It also provided additional time for policyholders to make payment for written payment agreements. The additional time will not be considered a modification of the written payment agreement, and the insurance providers may waive any additional interest for the payments. The next item is self-certification of replanted acreage. RMA increased acreage authority for self-certification by producers for replanted acreage from 50 to 100 acres. We also authorized those policyholders who elected enterprise units, which is generally Crop County, to apply this acreage authority to the underlying APH databases, which is actual production history databases, certified by the producer at the basic or optional unit levels. And it further authorized producers who insured at basic units to apply this acreage authority to the underlying APH databases certified at the optional unit level by producers. Also contained in this was The witness signature requirements were waived for assignments. Yet we will still require documentation for the proof of debt or other pecuniary obligations before an assignment will be accepted. That's just to ensure that there is a proof of debt there since we're waiving those witness requirements. The next item is dairy revenue. The subject of this manager's bulletin was to address dumped milk for both dairy revenue protection and livestock gross margin. RMA allowed insurance providers to count dumped milk towards the milk marketings for dairy revenue protection or for livestock gross margin, the actual marketings. The bulletin also removed testing requirements for dumped milk under the dairy revenue protection component pricing option. The purpose of this bulletin was that the dumped milk was not to penalize the producer that actually produced the milk, but due to COVID-19, couldn't sell the milk and had to dump it. The policy requires milk to be sold in order for it to count. And then keep in mind, this is more of an underwriting check to make sure that the producer doesn't overinsure more milk than they typically produce. So by waiving this requirement, it was intended to provide relief to the dairy producers that had to dump the milk due to COVID-19. The next item is organic certificates. The crop insurance policy requires an organic plan or a certificate to be in effect by the crop insurance acreage reporting date. Some policyholders may not have been able to have an organic plan or a certificate in place due to the social distancing and other COVID-19 precautions. The relief allows policyholders to certify that they have requested their organic plan and certificate by the acreage reporting date. So basically that change was, instead of having that in effect, it just has to be requested. And the Risk Management Agency did discuss that with our sister agency at AMS and their national organic staff. RMA continues to work with its stakeholders and recognizes the challenges the crop insurance industry and American farmers and ranchers face, and remains committed to provide flexibility that supports both the health and safety of all parties while ensuring that the federal crop insurance program continues to serve as a vital risk management tool. On the next slide, RMA has added a link on its intranet homepage for COVID flexibilities. Our webpage is found at www.rma.usda.gov. This site provides links to the manager's bulletins that have been released to provide COVID relief. Additionally, the frequently asked questions address questions pertaining to COVID-19 crop insurance implications, and also further explanation of the material contained in the manager's bulletin. This internet location also lists the RMA press releases regarding COVID relief. And then in addition to these resources, our insurance providers and their agents, as well as our RMA staff and our regional offices, remain committed to delivering the crop insurance program effectively for our producers. Our contact information is also available on the website for both our RMA offices and our insurance providers. Thank you very much for the opportunity to talk to you today, and that concludes my presentation.
Oh, great. Thanks so much, Pam. All of this, such good information. One thing that I want to state before we move over to the Coronavirus Food Assistance Program from FSA, we also have other sister agencies that have flexibilities that they have identified during COVID. Some of those programs may be applicable to farmers and ranchers, so we encourage you to visit those websites as well. That would be rural development. They do have a business and industry loan, business and industry program that is applicable to farmers and ranchers. So I encourage you to visit the rural development website at RURDEV, ruraldev.usda.gov, or you can always go to usda.gov and click on rural development. And then our sister agency, another sister agency, we're all family here, is Ag Marketing Service. They are implementing the other part of this coronavirus food assistance program. It's two parts. There's the direct payment program, and then there's the food box distribution program. So AMS is handling the food box program, and FSA is handling the direct payment program. And that's what we're going to talk about right now. We're going to talk a little bit about the basics of Coronavirus Food Assistance Program, or CFAP, as we commonly refer to it. This program was established as a result of the CARES Act in response to the coronavirus. And what it does, it helps to address two challenges that our producers have faced from the virus, and that is, one, price declines, and two, supply chain disruption. As you know, this pandemic has caused both decline in demand for some commodities, and it's also affected the market supply chain. So we have producers who may have had challenges in getting their products to market before they spoiled, or maybe they had to dump milk from contracts to keep contracts from getting canceled, or from canceled contracts. Or there are some producers who were affected by restaurant and school closings. And as we know that there's no program that's going to make any of us whole again, this program does provide some initial relief through direct payments and will cover a portion of the impact that has been felt from these farmers and ranchers from the virus. To ensure that as many funds are available to serve as many producers as possible, producers whose applications are approved will receive 80% of their total maximum payment now, and then up to the program payment limit, and any additional will be determined by the Secretary and announced at a later date. So just to share some general information, FSA is accepting applications now through August 28th. And because FSA is working to ensure that they receive relief as soon as possible, FSA is not requiring documentation for losses that are reported on the CFAP application. Again, documentation is not required for losses reported. Producers in this program will be able to self-certify that the information is accurate. However, it's important that producers do keep on hand and collect any documentation that they may have, as it may be needed in the future should USDA perform a spot check, or should the local county committee request to see some of that documentation. So it's very important to keep it on hand, but it is not required to apply for the program. Another thing that I want to mention is that producers who may have an interest in an operation should apply individually. For example, if producers are operating within a cooperative structure, growers should apply individually to the program. Applications for CFAP should be submitted to the office where the operation occurs. So wherever your operation, the county that your operation is in, is the county office where you will need to apply. We'll talk a little bit later about how to locate those offices. On eligibility, FSA has identified commodities that are eligible for CFAP payments based on commodities that experience a 5% or greater national price decline as a result of COVID-19, or commodities that have substantial marketing costs of inventories. Now, this is not applicable for specialty crops in categories 2 and 3, but FSA sought to identify all available price data, including prices collected by USDA and commodities traded on the futures market. What we really want to emphasize is that for this program, producers should own one of the following commodities. The covered commodities include dairy, which is milk, livestock, non-specialty crops, wool, and specialty crops. Just to give you a idea of what some of those non-specialty crops may be, they include malting barley, canola, corn, upland cotton, millet, oats, sorghum, soybeans, sunflowers. There is a full list. I can't go through all of them, but there is a full list available on the farmers.gov /CFAP website of all of the full commodities that are eligible for the program. couple of things I want you to know. To be eligible, you do not have to be an existing USDA customer. You can be a new customer. Something that may be important to know if you're a producer who may have been in the midst of filing for bankruptcy or closing operations, but you were still operating within mid-January through mid-April timeframe, you still are able to apply. A question that we've gotten from several is questions about participation in the Small Business Administration's Paycheck Protection Program, the PPP program, or the EIDL program, which was the Economic Injury Disaster Loan Program. The question is, if I'm participating in that, does that preclude me from participating in the CFAP program? No, it does not impact producer eligibility for CFAP or for any USDA farm program. So that's really something that we want to make sure everyone knows. Participating in those programs does not exclude you from participating in CFAP. Processing entities are eligible for the program. Payment limitation is applicable for individuals at $250,000 per person. But what's different from other USDA programs or other FSA programs, some participants, such as corporations, LLCs, corporate entities, are subject to special payment limitations. These categories can receive up to $750,000 based on the number of shareholders, not exceeding 3, who contribute at least 400 hours of active person management or active labor. So we told you about the listing that's available online of eligible commodities, but there are some commodities that are not eligible, that did not suffer a 5% or greater price decline from mid-January to mid-April. Some of those commodities include sheets more than 2 years old, eggs, layers, soft red winter wheat, white wheat, rice, flax, rye, peanuts, feed barley, ELS cotton, alfalfa, forage crops, hemp, and tobacco. An important note, USDA may reconsider the excluded commodities if credible evidence is provided. Repeat, USDA may reconsider the excluded commodities if credible evidence is provided. We're going to tell you about providing that information. But before I leave this slide, one thing that I do want to mention, that specialty crops are different. Categories 2 and 3 are not required to meet that 5% price decline. Payments. Again, we know that payments are not expected to make any producer whole or compensate you for all of your losses, but this program is designed to give you some financial relief. If you have, this is another important question that came in, if you're a producer who has outstanding debts with USDA, are you able to still apply for the program? Well, yes. If you are eligible, yes, you can apply, and you can apply with the assurance that your payments will not be withheld to satisfy a USDA debt. So that is important to know. Also, this is not a loan payment, not a loan program. You do not have to pay back payments that you receive from this CFAP program. Also, there are no fees to apply for the program. So I mentioned I mentioned a couple of slides back about submitting evidence and providing additional commodities to be considered for CFAP. Not all specialty crops or commodities were included in this program rule, and USDA actually needs assistance in identifying those additional commodities that may have experienced loss and market disruption. So FSA has issued what's called a Notice of Funds Availability. It's called a NOFA. We like our alphabets, so NOFA is the acronym that we call Notice of Funding Availability, and that allows producers the opportunity to provide information on any of those unlisted crops for consideration into this program. So a NOFA is what we call a request for information. FSA needs more information to determine whether other commodities experience loss or market disruption to qualify and be a covered commodity under CFAP. So what this is, it's giving producers, again, that opportunity. Those who grow commodities that are not currently eligible for CFAP gives you the opportunity to submit that pricing data to say, yes, we did experience 5% or more greater decline, and here's the data to support that. So it gives you an opportunity to submit information on inventory, prices, market disruption. And if it's approved, that new commodity will be added to the listing of eligible crops. And then producers will be able to have the opportunity to apply under CFAP. So the NOFA is a very important process. The deadline is June 22nd. We're trying to do as much extensive outreach on that as possible to give producers that opportunity to submit their commodity that may not have been covered. On our farmers.gov website, we do have a NOFA fact sheet that provides information on how to submit that information. It has the link to the regulations.gov website to upload that information that's required, or there's always the option to mail it to the office in D.C. And so that address is all on that fact sheet. Before I leave the slide, I do want to say that specific emphasis, USDA is really interested in receiving data on nursery, aquaculture, and cut flower products. A little bit of general information. When it comes to applying for the program, all of your eligible commodities should be included on one CFAP application. So let's just say that you're a diversified farmer who has cattle, you've got livestock, you've got wool, you've got tomatoes, and you may even have alfalfa. You've got all types of different commodities. You would not submit separate applications for that. You would submit one application. I'm going to talk to you a little bit about that application. We have a payment calculator that automatically generates the application for you. And that payment calculator is actually on an Excel spreadsheet. That Excel spreadsheet, you should record everything under one file. Don't do separate files. It should be under one file, which will populate one application. We encourage you that right now, if you have some of those eligible commodities that we listed, apply now. You can amend later if you have a commodity that wasn't included in the eligibility column. You can include that later. Don't wait. Don't think, oh, well, let me submit this NOFA and see if they're going to take my kumquats, and then I'll come back later and do my livestock and my kumquats and my tomatoes. Don't wait. Do what's eligible now, and if that additional commodity is accepted into the program, you'll have time to revise your application. So I talked a little bit about the payment calculator. I want to go over some of those forms and documentation that is needed. To apply, you have to have the actual CFAP application, and that is a AD 3114 form. It is automatically generated from that payment calculator I mentioned. Well, Latrice, what is this payment calculator and where is it? Where can I find it? Again, farmers.gov/CFAP has all of the tools, all of the information, the fact sheets, the eligible commodities, the webinars, recordings, everything that you need is on that website. But when you go to it, the calculator, there's also a video that's available. That video will walk you through the process of using the calculator and help you understand how to include more than one commodity in case you have more than one. Additional forms that I want to briefly go over is I'm going to start with the CCC 901. And I know that we try to keep these webinars at 1 hour. We have exceeded the 1 hour mark, but because this information is important and it is being recorded, I am going to continue and go through this as if you are participating for the first time, because some of you are. We've been conducting these webinars every Tuesday and Thursday for the past couple of weeks. but I want to be sure to go over each of these slides because it's important that you get it. So if you would, bear with me here. A CCC 902 form, 901. Let's start with 901. That is a member information for legal entities, and it may not be applicable to everyone. That's just for legal entities. The CCC 902 is the Farm Operating Plan for Payment Eligibility. That is a form that would be completed. It may or may not be applicable, shall I say, for everyone. But for that form, you only need to complete sections A and B of that form. The CCC 941. That is what we call the Adjusted Gross Income form. It reports your average adjusted gross income for programs where income restrictions apply. A CCC 942, if applicable, this certification reports income from farming, ranching, or forestry for those who exceed that adjusted gross income limitation. The AD 1026 is a form which ensures the producer's compliance with any highly erodible or wetland determination made in our conservation compliance plans. AD 2047 is just a basic customer contact information form. And my favorite, should be yours too, the most important form, is the SF 3881. That is the direct deposit form. That is the information that collects your banking information that allows us to make payments to you direct deposit. Please note that all payments will be made via direct deposit. So when you're applying for CFAP, again, you may have all kinds of questions. We've had a lot of questions today, and hopefully we've been able to answer most of them. But there is a frequently asked questions page on the CFAP. That's all from the CFAP page. This is the link. It's updated very frequently. I encourage all of you to take a look at that. There may be questions that you don't think of right now during this webinar. Please visit that website and review those questions and answers. They're very helpful to you. Again, you'll also see the calculator there that's going to generate that application form to you and show you estimated payment. And for those of you who may be new to FSA, one thing that I wanted to share with you is that we post all of our regulations online. So at any time you can go online and read our policy and our handbooks on fsa.usda.gov. Okay, Latrice, I need some help. I want to apply, but I don't know where to start. I'm a new producer. I don't know anything about USDA. I'm not used to working with USDA service centers or the Farm Service Agency. How can I get help? Well, the first step is to call our customer call center. And I'm going to talk a little bit about that in detail on the next slide. But, you know, as we mentioned earlier, due to the coronavirus, most of our offices are open by phone appointments only. We're starting to see some of our offices across the country reopen in different phases, but at this time, phone appointments are available. What's important to know is that if you are a limited English proficient speaking producer, or if you're unable to speak English, we have a language interpretation line. We also are able to provide some documents to you that are translated in the language that you need. So when you call this customer care center, which I'll talk about on the next slide, you will press 1 to identify the language that you need, and you'll be transferred to an interpreter. Spanish-speaking producers can press 2. We do have fact sheets that are available online in Spanish, and for any other languages, you will contact that customer care center, let them know of your needs, what documents you need translated in what language, and they will be happy, more than happy, to assist you. So the customer care center, what is this? This is something that FSA formed for CFAP It is comprised of FSA field office staff from around the country. So these aren't people who don't know the programs. They actually know about CFAP, and they can answer your questions. And this is really to help those producers who've never done business with us before and have questions about the process, questions about forms, questions about payments. Whatever your questions are, these folks can help you. And the more people who utilize this number, the better. Because as I mentioned earlier, we have limited staff in the offices right now due to the virus. And so the staff that are there, they have been there the whole time. Please understand, at no time have our staff not worked. We've had someone in every office the entire time. It's just been closed to the public. We may have had 1 or 2 employees working. We're slowly building up capacity. But the important thing to know is that they're working as expeditiously as they can to process these CFAP applications and get the money out the door. So the more people who can call the customer care center, the more time they will have to process the applications. So let this be your first stop. You don't have to get an appointment. You don't have to have an appointment. This is only if you have questions or you need to. You can go to the CFAP website and get all the information you need, the forms you need, and apply electronically. You don't have to have an appointment. You can submit, and the office can get in contact with you if there's additional information. But that number to call is 1-877-508-8364. Again, new to USDA, you may not know that traditionally for our programs, a farm number is required to apply and receive payment. That is not the case for this program. You do not have to have a farm number to apply or complete the application, but there is an opportunity or there is a chance, an off chance that the office may contact you for additional information later that may be needed regarding conservation compliance. And eventually, if that is the case, then a farm number may need to be obtained at a later date, but not now. You are able to apply now without a farm number. Don't wait to get help. Call that customer care center now. They are, after you've talked with them, they are able to transfer you over to the office that serves you. So again, let that be your first stop. A couple of forms that weren't online because they're not required, they're optional. These are demographic forms that are available to assist and identify if you're a beginning farmer or a veteran farmer, your race, ethnicity, and gender. And this information just helps USDA to capture data to help us improve our programs and provide necessary reporting information back to Congress. They're optional, but those forms are AD 2106 and a CCC 860. The order of events, again, as I mentioned, we recommend that you visit the website to access the application online. If you're unable to do that, you can also request an application by phone and have it mailed to you or sent to you electronically. If you feel you're going to need an appointment, go ahead and schedule it, but it is not required. You'll begin filling out your application and all of those forms using the payment calculator. Once you've done that and you sign your application, you are able to submit it. If there are any questions that the office has, they will reach out to you. You will have 60 days to submit any additional information that the office may need for you. So if there's any confirming information they need or additional clarification, you have 60 days to get that back to them. But you are able to submit your signed application, and you'll have 60 days from the date you sign your application to submit any additional information. Once it's processed, reviewed, approved, you're either approved or disapproved, and 80% of that eligible payment is processed to you and sent to you by direct deposit. So I don't want to repeat here what happens. I just mentioned you have 60 days from signing that application to resolve any eligibility issues that the office may contact you about. once that is done, they're going to process and approve or disapprove the application and process the payment via direct deposit. Tips for success. We want you to succeed. We want you to be able to successfully access all of the resources you need to participate in this program. So again, we ask that you visit www.farmers.gov/CFAP. Again, there are videos there. The payment calculator is there. The forms are there, webinars, fact sheets, the NOFA. There is a video on the NOFA process that is also there. The rule that talks about the program and the cost-benefit analysis, how USDA came about with this program, how they came about with the pricing determinations, all of the different commodities, information on how to call that customer care center, the line, the number there for that line is there. But we ask that you do take advantage of submitting electronically. You know, if you just need that hard copy, that's fine. But as we talked about earlier, through the box and OneSpan, you are able to securely submit those forms electronically and safely and securely. So we ask that you take advantage of that. And then the NOFA process. If there are commodities that you grow that were not included in the program and you know that it experienced more than a 5% loss between those dates that are listed for the CFAP program, please submit that information and that pricing data through the NOFA process on regulations.gov. All of that is on the website. So I'm not sure how you heard about us. I'm not sure if you received a Gov Delivery news alert directly from our office, or if someone forwarded it to you, or if a stakeholder organization shared it with you. But if you want to subscribe to us and find out exactly when we're having additional webinars, announcing program announcements, events, all types of different resources that we have available, we ask that you subscribe to our alerts. You'll go to www.fsa.usda/subscribe. Once you're there, you'll enroll by including your email address, and you'll select Outreach and Education. And this signs you up to receive updates, information, and newsletters directly from our office. On behalf of the administrator of the Farm Service Agency, I would love to thank the presenters from FSA, NRCS, and RMA today who have joined our office and sharing this information with you. We do ask that if you have any questions, do look at that frequently asked question page that has many of the answers that you're looking for. We will work with you to answer any questions that you've submitted here. Any questions that you may have, we do ask that you call that hotline. FSA can assist you with that payment calculator. Any questions you have, call the hotline. They can walk you through it, and they can help you with that. So we ask that you utilize the resources that have been made available to you. And again, we thank you for participating in the webinar, and we wish you all the best. Be safe. Goodbye.